The company, based in Milwaukee, Wisconsin, said it's scrapping its 2025 outlook due to uncertain global tariff situation and macroeconomic conditions. President Donald Trump's tariff on Chinese imports, now up to 145%, has forced Harley Davidson to brace for a steep bill, even though most of its suppliers are U.S.-based. The brand still relies on key parts from China, which are now significantly more expensive to import. Harley Davidson warned investors on Thursday that the price shock and economic jitters have taken a serious toll. Its global motorcycle sales tanked 21% compared to last year. The brand blamed a volatile macroeconomic environment and overall consumer uncertainty for the plunge. While car makers saw a temporary rush in sales as buyers tried to beat tariff hikes, the bike maker didn't get the same boost. Customers pulled back on big-ticket purchases like motorcycles, hitting Harley Davidson where it hurts. In the U.S., retail sales fell sharply and motorcycle shipments plummeted to 24,865 for the first quarter, reported the New York Post. That's a steep drop from 41,577 units during the same period last year. Revenue also fell 23%, sinking to $1.33 billion compared to the previous year. CEO Jochen Zeitz said the company is now focused on cutting costs and managing its supply chain more tightly. He added that Harley Davidson plans to slim down its inventory at dealerships and crack down on operating expenses. Despite the gloomy news, shares rose 3.4% by midday on Thursday. The market rally came as data showed U.S. companies are stockpiling goods ahead of more tariffs. But consumers aren't feeling as confident. Sentiment fell last month to its lowest since October 2011. Many fear the trade war could heat up inflation or even trigger a recession, according to a conference board survey. Harley Davidson is also facing leadership drama at the top. Zeitz announced last month he plans to retire, kicking off a search for a new CEO. Activist investor H Partners is trying to oust Zeitz and two other longtime directors from the board. The investment firm blames him for the slump and what it calls the company's cultural depletion. According to the Wall Street Journal, Harley Davidson has fired back, accusing H Partners of pushing for a power grab. The company claims the firm is bitter after its own board candidate didn't get support. Meanwhile, the motorcycle giant is weighing the sale of its financing arm, Harley Davidson Financial Services, which could fetch $1 billion or more. Potential buyers include regional banks, private equity firms, and private credit players. The decision isn't final, but the company has begun testing the market for interest. HDFS helps dealers finance inventory and supports consumers purchasing Harley-Davidson bikes and Livewire models. The move comes as weak sales, sluggish stock prices, and fierce competition from Honda and BMW continue to erode investor confidence, according to Business Times. Harley Davidson shares plunged 9.3% to $21.49 on April 10th, dragging its market value to $2.7 billion. TS stock lost nearly half its value last year, down 48%, a slide made worse by the Trump tariff war. The showdown is set to come to a head at Harley's annual shareholder meeting later this month.